The last several years have presented China with enormous challenges. Chinese leaders, including Chinese Communist Party, CCP, General Secretary Xi Jinping, now frequently stress that the world is undergoing profound changes unseen in a century amid fluctuations in the existing international order and balance of power. While Beijing sees promise in some of these changes, Chinese leaders have concluded that China needs to chart a new economic course to avoid falling prey to global economic volatility and growing fears of geopolitical encirclement. Underlying many of Beijing's concerns is a growing sense that further integration into the global economy is not the reliable engine of growth that it once was. In the 1980s, when China first began opening to the global economy, the world outside of China was growing roughly 4% each year. By comparison, the world minus China only managed to grow about 1.6% per year during the last decade. We are going to be looking into the dual circulation strategy that the Chinese government proposed, if it at all is able to overcome the current economic deficit, if there are other plans aside, and how badly affected is the Chinese economy going forward and what it means for the world as well. Don't forget to hit the like button, subscribe, and leave your comments below.
How does Beijing and their leader in Beijing, how does he look within, giving the grim data of the day?
Actually, President Xi has made a major campaign of his to start looking inward. It's called the dual circulation strategy, where he wants to have the domestic economy become the primary focus for China and the source of growth going forward. Unfortunately, so much has collapsed within China that the domestic economy is nowhere to be found, especially in the private sector, where the only store of wealth the middle class had, the property sector, has completely collapsed. We've had about a year of declining real estate prices. So right now, the rest of the world is the only hope for China, and even that's collapsed because the latest data show the export numbers are nowhere to be found. So China really has nothing to hang on to going into the Party Congress.
Dual circulation may seem like the only way to get China to its dream economic capacity, but whether that is the right choice to make at the time has been proven null, as all efforts to apply such a strategy seems futile. Domestic international dual circulation is set to reorient China's economy by prioritizing domestic consumption, internal circulation, while remaining open to international trade and investment, external circulation, and mitigating the volatility of global markets on the international stage. The strategy, put forth by China's Politburo Standing Committee in May 2020, includes the goal of improving the country's capacity for innovation, reducing dependence on foreign markets while simultaneously staying open to the outside world for trade and investment. It is defined as the domestic consumption-driven economic rebalancing to achieve sustainable economic development. In other words, China is seeking to gain independence from the West. Eatsai News notes, to achieve a virtuous circle of economic development in our country, efforts must be made to unlock the potential in both domestic and international centers of growth. This new policy has a symbiotic relationship. The domestic circulation should be embedded in the international circulation and independent of the international circulation. The international circulation should not only include the domestic circulation but also serve the domestic circulation. Chinese leaders are well aware of the need to discontinue the country's existing growth model, but they haven't yet landed on sustainable alternatives. Common prosperity, which at its core equates to more equitable income distribution but similar to dual circulation, has a significant vision but lacks insufficient details on execution. Beijing's new common prosperity policy will only help shift domestic demand at the margins, Michael Pettis wrote, and a full-fledged rebalancing will require a more radical transformation. He and many other global economists are not optimistic about the long-term viability of China's dual circulation strategy. In theory, the model would only be possible to accomplish by shifting a huge amount of investment with low and even negative economic returns into high-productivity sectors of the new economy. The reality is that Beijing has been trying unsuccessfully for the last few decades, but has failed to fully embrace a coherent alternative. According to Daniel H. Rosen, if Beijing cannot induce private firms to ramp up their investment and cannot persuade major economies, namely the US and Europe, to remain engaged with China, then the country's clear economic outlook will be adversely impacted. Policymakers believe that with business and household debt levels already extremely high, China can scrape out perhaps 2 or 3 more years of economic stability by piling on further loans, as long as global capital flows and supply chains do not dry up. After the Evergrande incident in China, one of the fundamental questions raised is, if firms and investors pull back, or if China needs to raise interest rates more aggressively at home, how would that impact the economy? Unlike Japan, whose asset bubble popped in 1991, China is not yet a mature, high-income nation. As determined as Xi Jinping's vision is, the execution level is not impressive. Of paramount importance is the fact that many industries and factories fail in China due to the lack of domestic demand. As of now, a lot of what's have been addressed with respect to dual circulation, but the how is still a work in progress. China is at a unique economic and geopolitical inflection point. As Russia's economy teeters under the West's unified economic sanctions, many in China are concerned that Beijing could also be subject to similar crippling sanctions. Russian firms are rushing to open Chinese bank accounts. However, some Chinese banks and businesses appear reluctant to transact with Russia for fear of secondary sanctions. According to Bloomberg, two of China's largest commercial banks recently restricted financing or purchases of Russian commodities. Through China's dual circulation policy, many hope that China can implement reforms which enable its financial institutions to be more competitive. Or in other words, China is rethinking how it's going to engage with the world. It won't happen overnight, and it will take many years to be fully implemented. That being said, dual circulation does not mean China will isolate itself from the rest of the world. China will welcome foreign investment, negotiate more free trade agreements, and take advantage of its free trade zones and ports. But the economic relationship between China and the West is also unlikely to return to historic ways when China relied on an export-oriented growth model. In addition, foreign firms operating in China will have to play by the Chinese Communist Party's rules. The growth of China's domestic consumption is a strategic play to help insulate China's economy from external headwinds, as both the Trump and Biden administrations block China's access to key semiconductor exports. The fundamental reality is that in order for China's dual circulation strategy to succeed, it must first undertake economic reforms such as a floating exchange rate, reining in rapacious corporate debt and investment into China's stock market. For Chinese investors, China is not moving forward towards a U.S.-centric service-focus-oriented business model, but rather the German model, high-end manufacturing and industrial upgrade, and will need to make sure their goals align with common prosperity. It is also worthy of note that there is an already existing balance sheet recession in China, which some officials may try to hide but have become a very sad reality.
A balance sheet recession for sure in the private sector, because the only source of saving for the households has been real estate and a very volatile stock market. And so with the collapse of the real estate market and the huge youth unemployment, it's very hard for households to have a positive outlook for the future and start buying things like consumer durables and other items. So the balance sheet recession notion is very much in play in China.
For most Chinese households, real estate property and human capital, and their future income, are the most important assets. Housing market corrections substantially dampened expectations for continued appreciation of house values. The resurgence of the pandemic and its economic impact, rising unemployment rate, and adjustments in certain industries added to the uncertainties of family income and necessitated a reassessment of households' future income flow. Under the combined effect of these changes, household assets will no longer grow as they did in the past, if not decline. Accordingly, households must adjust their liabilities either by borrowing less or reducing existing debts. It has been proved in recent data. In Q1 2022, China's household leverage ratio was 62.1%, a decrease of 0.1 percentage points from the previous quarter. Medium and long-term household loans increased by 1.07 trillion yuan, down 46%, 910 billion yuan, YOY. In April, medium and long-term loans dropped by 31.4 billion yuan, a decrease of 523.2 billion yuan YOY. In terms of government balance sheets, the outstanding explicit debt of governments of all levels in 2021, including central government bond, local government general bond, and local government special bond, stood at 53.7 trillion yuan, with a debt ratio of 47%. In addition, based on the IMF's estimate, if we take into account the implicit local debt that the government is obliged to repay or take responsibility for, 61.4 trillion yuan in 2021, the debt ratio would be 100.7%. The rest of the world would have to find a way to move on without China, or rather reduce its dependencies on China, as it seems like they have a lot on their table and won't be in any recovery phase anytime soon. Let us know what you think about this continuously worrisome economic challenges and solutions you think would be feasible. Let us know in the comment section. Don't forget to like and subscribe. Thank you for watching.